When it comes to investing into ETFs, Vanguard is one of the biggest and most trusted providers on the market. However, picking the right investment from their wide range of funds can sometimes be a little overwhelming to say the least. Which is why in this video, I'm going to be going through my top 5 low-cost and high-performing Vanguard ETFs for 2022. Plus, if you stick around, I also have a major warning that anybody looking to invest into a Vanguard ETF this year must know. But having said that, let's jump straight in. Alright, so starting the list off in no particular order, let's get the most diversified of them all out of the way, and that is the FTSE All-World ETF. This comes with the ticker symbol VWRL, and the reason why I say it's one of the most diversified is because this fund currently holds 3,793 stocks with coverage across 5 different regions. Now, if you did decide to invest into this ETF, you will essentially be investing into companies mainly across North America and Europe, but as you can see, this fund also has an 11% allocation to stocks based in the Pacific, a 10.2% allocation to emerging markets, and a tiny percentage into stocks in the Middle East. Moving on to the fund's past performance, for the most part, things have been pretty positive, with 2018 to 19 being the only year we did see a negative return on investment, and even then, that was only at around 1.19%. Now, if you did want to go ahead and purchase this fund, it's going to cost you at the time of recording this video £87.78 per share, and this fund currently has an ongoing charge of 0.22%, which, whilst this is still extremely low, is not going to be the cheapest in comparison to some of the other ETFs that I'm going to talk about in this video. Moving on to the final thing to mention about this ETF is that this ETF, alongside all of the other ETFs in this video, pays a dividend for every share that you own, and you will receive this payment every single quarter. What I've done is put on the screen some of the most recent dividends that this has paid out over the past couple of years, but overall this is a great fund for somebody that wants coverage all across the globe, and also somebody that wants to just invest into one ETF and that's it. The next fund we're going to be talking about is going to be the S&P 500 ETF, which has the ticker symbol VUSA. This ETF consists of 508 stocks. It tracks the largest 500 companies in the USA, and it comes to no surprise as to why this fund is a fan favorite when we actually take a look at its past performance. As you can see, over the last 5 years, this fund hasn't had a single losing period, and whilst it is currently down for this year, I certainly wouldn't be betting on any money that is going to stay like that. In terms of my own portfolio, this fund is actually my highest holding to date, where I own 233 shares, and in the past year alone, it's made me close to £2,500 in capital gains, alongside over £200 in dividend payments. Now, when we take a look at where all of these 508 stocks in this fund are actually based, it doesn't take a genius to work out that with it being the S&P 500 fund, all of the companies are obviously going to be based in America. But one thing that is really interesting here is that if we do take a look at the individual top holdings, we can see that 6.91% of the funds are invested into Apple stock, 6.03% of the funds is invested into Microsoft, 3.60% is invested into Amazon, and so on. So knowing that, if you are somebody that wants to invest into the big tech companies across America, but you literally have no idea in which one to pick, then investing into a fund like VUSA will give you coverage across the board. Now, taking a look at the price of this ETF, is currently valued at £64.42. One thing that I do have to mention is that this fund does have a risk factor of 5 out of 7, but one thing that you do have to also bear in mind is that this is actually compared to the other Vanguard funds, and some of these funds actually invest 100% into bonds, so it's not really a fair comparison. But in terms of the bigger picture, investing into any of these ETFs mentioned in this video is going to be much less riskier than, let's say, investing into individual companies. Now, if I was to pick out one downside to investing into this fund, it's definitely going to be that you won't have the exposure to other reasons like you would in the FTSE All-World. And yes, the American economy over the past decade has certainly been the leader, but it's not to say that it will be like that forever. So in that case, it might be worth pairing this ETF with these next 2 ETFs, which are the FTSE 100 ETF that has the ticker symbol VUKE, and the FTSE 250 ETF, which has the short code VMID. Now, what I've decided to do is add both of these ETFs as one ETF in this video because they are very much similar with only a couple of differences. First off, the FTSE 100 ETF will essentially track the top 100 companies based on the London Stock Exchange. This fund will cost you almost £33 per share. It has an ongoing charge of 0.09% and it has a risk factor of 5 out of 7. Now, the difference with the FTSE 250 ETF is that it tracks companies number 101 to 350 in terms of market cap on the London Stock Exchange. It's a tiny percentage more expensive than the FTSE 100 with its ongoing charge, and it has a slightly higher risk rating of 6 out of 7, which is mainly because you are investing into smaller companies. Now, when we compare both of these funds' performance side by side, there really isn't too much in them. As you can see, over the past 5 years, the FTSE 250 ETF has actually seen on average higher returns with 0 negative years. However, recently in the past year or so, the FTSE 100 has completely outperformed most ETFs, bringing in gains of over 19%. Now, something that's great about both of these funds is that if you were torn between which one you wanted to invest into, one option that you can actually do is simply just own both because none of these holdings actually overlap each other. Next up is the FTSE Developed Europe excluding the UK ETF that has the ticker symbol VERX. Now, this fund is pretty straightforward in terms of what it does, and that is to simply track large and mid-sized businesses in developed markets in Europe, but in this case, we're actually excluding the UK. So, what's the details on this one? Well, first up, it's going to cost you £29.35 per share at the time of recording this video. This one has an ongoing charge of 0.10%, and it currently has 483 stocks in total in the fund. Its largest holding at the moment is going to be Nestle at 4.42%, and some other notable companies are the holding group of Moët, Hennessy and Louis Vuitton, who holds a stake of 2.27% in this fund, and also SAP, who have 1.55%. One thing to note about these holdings is that whilst let's say 2.27% doesn't particularly seem like a lot, when you remember that this fund does hold close to 500 individual companies, to have one stock hold that amount is actually quite a bit, so it's definitely worth checking out the top holdings in this fund when you're doing your own research. Now, taking a look at this fund's past performances, it's had a really solid year with minimal losses in 2018 to 2019 and a really consistent and good performing past 2 years. Another thing to take note of in this fund is that it does actually have a pretty low price to earnings ratio of 13.6, which is lower than both the S&P 500 ETF and the FTSE All-World one. So overall, if you have a positive outlook on European business, this fund could be an amazing option for you as it's currently super cheap in comparison to the others despite having a good past couple of years. Next on the list of the best ETFs is going to be the FTSE Developed World ETF that has the ticker symbol VEVE, not to be confused with a popular NFT platform. This fund is actually similar to the FTSE All-World ETF that I spoke about at the start of the video. However, the main difference here is that this fund does not include any stocks from emerging markets. Another thing to note is that this fund also has around 1,500 less stocks in the fund than the FTSE All-World, but that doesn't mean it's not as diversified. It's simply the case of the exclusion of smaller companies allowing more allocations to the bigger ones, which are generally a safer investment. Just taking a look at the previous 5-year performance with this fund, things do look very positive, and a lot of the things to do with this is its majority allocation to US-based stocks. This fund, just like all of the previous funds mentioned in the video, does also pay a dividend on a quarterly basis, and on screen I've thrown up some of the most recent months' distributions per share. Now, for the big warning that every new and existing Vanguard ETF investor should know about, and I see this mistake across so many different portfolios, is that you need to understand your exposure within each fund. I have seen so many times, let's say an example where somebody would invest into the FTSE All-World, and then they would go ahead and invest into the S&P 500 fund. And if we go ahead and just take a look at the regions in terms of exposure to both of these funds, we can see that they are essentially just investing into the same thing twice when they could just allocate all of their money into the more diversified fund. I think it's so important not to make a mistake like this, which is why I went ahead and created this video up here where I help you build the perfect Vanguard portfolio with all of the funds that I mentioned today.